Welcome back to the LPR Trading Group YouTube channel. It's Dave again. Today we're going to talk about when and where to execute trades. What I want you to do is watch through this session. I'm going to talk a lot about reducing the area that you trade in. Give yourself a certain trading range to take trades in. Essentially give yourself time where you can just sit on your hands, do nothing, and wait for a trade to come to you. This is going to significantly reduce how many trades you take, how much exposure you have to the market, and how many low probability, low risk, or high risk situations you put yourself into. I think this is a really good one. The video is not too long. I want you guys to stick through it. And again, leave all your comments down below. I'd be more than happy to get back to you guys on any questions you might have. With that being said, enjoy. All right, let's get started here. So from the intro, you guys know we're going to talk about how to minimize your trades and how to execute trades at maximum value areas. Now listen, this is something I struggled with when I first started trading. There's a chart like this, for example. This is ES's price action for the day. Now, what you're going to see on this 1 minute chart is a lot of price movement and oscillation. Now, if you're just zoomed in on every single 1 minute candle or every single 1 minute piece of order flow, you're going to get largely confused. Now listen, there are people who scalp these order flow type plays, which is great. But I'm going to say for the average person, you need to go back and look at the bigger picture and chop the chart up into sections. What do I mean by that? We can actually define areas that we want to take trades usually before the market even opens. Now the way we do this in the group is we define these areas by pivots, high of days, low of days. We use initial balances and high volume areas, okay? These are typically the only areas that we want to execute trades. What does this do for us? For example, if this is ES's price action for the day, give or take, well, this is like 36.16. This is like a 70-point range. Well, if you're trying to look within this range to try and take a trade in this 70, 80 point, 90 point range, whatever it is, let's actually see what it was. Yeah, it was about 90 points of range. You're going to get largely confused because if ES is moving one tick at a time, which is a 25-cent increment for 90 points, where is your entry going to be? And if you don't know, you shouldn't be trading. So let's just say right here, and this is purely hypothetical. We'll go over some examples in a second. If you had a range of, let's zoom this out. Let's say you had a range from 3,700, and this is going to be very rough, all the way down to 3,540 or even 3,500, okay? Now within that range, you dial that range down even more and you look at stuff that we're going to look at in a second and you say, okay, I'm only going to look for shorts in this area. I will also look for shorts in this area. Now listen, I'm just putting these boxes in just for the visual here. And I'm only going to look for longs in this area and this area. Okay, so all of a sudden, what have we done? We've taken this 150 points of range, high to low, and we've taken this whole trading range and chopped it down to maybe a 5 or a 10-point zone, a 3-point zone, a 5-point zone, a 4-point zone. So all of a sudden, now you're only allowed to execute trades within a 20-point zone, right? Or 4 5-point zones, or whatever, maybe it's 10 2-point zones, but now you've isolated this chart. You've actually broken this down and made some sense of this market, right? Made some sense of how the market ebb and flows naturally. Now, typically if you're not doing this and you're just gripping and ripping trades based on what you see in real time, you could find yourself in some trouble. Now, we do have a system and a strategy for that as well. Me personally, I like to look at this big picture and really trade around these zones. Now, your areas or levels or zones can also be moving. I'm not a big moving average trader, but again, we do have traders in the group that are very, very effectively and efficiently using moving averages. So this zone will change. Why? Because when the market opens, the moving average, depending on what it is going to ebb and flow with price, right? Now, if you've looked at a system or tested a system and you say, okay, price is currently trending up. If that's our moving average there, price is currently trending up. I know that whenever it comes back to this moving average and we hold and we get indication on order flow or footprints or DOM, this is a high probability trade. Well, this is essentially a moving zone then for you. Me personally, I like to stick to my hard and fast volume zones. And this is just how I trade. You can absolutely combine a bunch of them, but I'm going to show you how I do it and why I do it. So now that we've broken this 150 point day or 150 point range down to like a 10, 15, 20 point range, now we have isolated areas that we know we want to look for trades. This does not mean that when price comes up to your isolated short area, you just short it as soon as it gets there. No, this is not how we work. We're called LPR for a reason, okay? We're writing this wrong here. Let's fix this up. LPR. Level is our L, okay? What's our level? Our areas of interest. P is pattern. What is the pattern that we want to see inside of those areas of interest? Okay, with your level, it needs to couple itself with a high probability pattern. This is order flow type patterns. We use some other tools, but pretty much it's going to be price and volume within your level, and we identify who is large and in charge in that area. Do we see a big money rotation into this area? Maybe we're looking to put on a trade. Do we see high of day or low of day traps? Maybe we're looking to put on a trade here. And then R, finally, is risk versus reward. If I take this trade at this level, what is my target, and am I getting sufficient risk versus reward on this trade? Okay. Now we'll move on from this 1 minute candlestick chart, and I'll show you some of the levels that I map out and how I map them out. I'm not going to go through everything because we already have that laid out in the room and it's a ton of material, but I'll go through a high level overview of what we do. This here is Quant Tower. This is one of the trading platforms I use. What I like to do here is I like to look for high volume areas. Now, you don't need this type of chart. You can use like a basic volume profile chart that'll give you profiles over the course of days or hours. Maybe this is a 1 hour candle and this is its volume profile, and this would be the next 1 hour candle and this is its volume profile. So if you can identify these higher volume areas, key for this, for me, higher volume areas that have not been tested yet, okay? What do I mean by that? Price has not come back up into these guys and broke through. Once it's broken through to the up or the downside, this level is no longer a high liquidity zone where big money wants to execute orders because transactions have been made, we've negated previous volume and moved to the upside, okay? So what do I do here? Now, I mark out high volume areas that I've identified on the charts. For example, what we'll do is we'll look at this right here. If I pull this over, this here is our Discord group, okay? And now, I was having internet issues today, but here's my post at 8:25 in the morning. This is over an hour before the market opens. Big picture breakout area looking to hold, okay? If this 36.1975 holds over under, I will be looking for longs today. That is today's price action. Let's go here. 39 or 36.1975. Where's that? That is this white line right here. I said this an hour before the market opened, okay? And what happened? We open, we wash, we hold over under this level, we go for a ride, and we never look back. How did I know this? Well, I didn't know it. It was just part of the plan. If this happens, this is what I'm going to do. One of the reasons I pulled this out was because of this pivot high. We have a beautiful higher low here on the 1 hour chart. We're actually breaking out of this nice range. Typically, what does the market want to do? It wants to pull back, find value, liquidity, load up more buyers before we move to the upside, okay? Along with that, what did we have here? See this box I have marked out? This is a high volume area. We call them high volume clusters within the group. Where was this high volume cluster? Look at this. 36, 15.75 was the low. 36.18.25 was the high. So now I've got this breakout area on a larger time frame coupled with a high volume cluster, which is huge in our group. We need to start looking at taking a trade in this area. We knew this an hour before the market opened. We didn't just let the market open and willy-nilly and just hope something worked. We said, if we get down here, this is what we're going to do. Okay, now you missed that trade, let's say. You know, the trade ran without you. You weren't fast enough, whatever it is. You're going to get better at taking these trades, by the way, once you start implementing a system on this type of stuff and you start getting more confident in it. So we'll pull this chart up because I know most of you guys use candlestick charts. Now you've missed this trade here off the lows. Fine. Price pushes up. Are we going to chase this? No. Are we going to be bad retail traders and buy a high of daybreak? No. Why? Because this happens. Now, oh, Dave, my stop would have been low a day. I would have got stopped out. Okay, even if that's the case, what's your risk versus reward? You need this to go many miles before you make any money consistently on this trade. You're most likely stopping out if you're buying the high of daybreak here. There wasn't enough of a move for a scalp, yada, yada, yada. So what do? We wait for a value pullback, okay? Now, what is a value pullback? A value pullback is one of our areas of held. We have conviction that a trade is going to move in a certain direction. Do we know for sure? No. Anybody who tells you they know for sure, they're full of it because they don't, right? We just make high probability educated decisions on what the market could and might do at any given moment. We're not trying to project the future by days, months, or weeks like some swing traders. We just want to know we're getting into a good trade here. So as the market starts topping out right here, I sent a message out to the chat room. Now this is in our day trading group right here. I sent a message out in the chat room right here, okay? 9:54 a.m. Traps below this most recent pivot will be, that's supposed to say good ads or longs with good RR, okay? So that was 36.29, and I'm going to draw a line here for you. Where's 36.29? Right here. Where's the 9:54 candle? Right here, okay? So price is actually moving up, and we know that we're not buying price on the way up. We're going to wait for price to come to us. Why? Because it's going to end up in one of our areas of interest, our key areas, and if it gets there, it's going to give us a setup to get long. So again, we said traps below the most recent pivot will be good ads or long positions with good RR, 36.29. So this is the area here. What happens? We get below 36.29, exactly what we want. Market rotates, buyers come in, push price to the upside. This isn't it's not magic that people are choosing these areas. And listen, don't get me wrong, we're wrong too. Most of the time in a month, the most profitable traders are wrong more than they're right. But when we're right, and we're buying here and getting these moves, all the times we were wrong didn't matter, right? When we're buying here and even just getting this move, all of the small little losses don't matter. So if you can trade this way and run like a 40% win rate, you're running God tier type trading here. The idea of this though is to absolutely be patient and wait for your setups. The key that I want you guys to take away from this video here, or this little session we're having, is break up your trading into smaller areas, okay? And the way I do that is with the high volume clusters that I identified before, and I told you guys you could use different options like volume profiles or whatever you want. I like to break up my trading. And look at how much I've broken up this trading. We'll go to a higher time frame chart. I'll zoom out. See all these boxes on my chart? You see all these areas here? These are areas that I am, and might still be interested in, okay? And I refresh these areas on lower time frames intraday, like 15-minute time frames. I'll add new areas. I always check my 1 hour and 30-minute clusters before the market opens or the previous night or both, and I make sure, listen, I have these areas that I want to trade off of. So if we look at this, the high of this range to the low of this range, the high is 37.50s, the low is 35.70s, so like 180 points of range here, right? With 180 points of range, I've narrowed my trading ranges down to a 3-point range, a 4-point range, a level, a 2-point range, a 2-point range, a 1-point range. You see how I just narrowed down 170, 180 points of range into like 15 points, 20 points? I only want to execute a trade, my A-plus trades within these areas. Now, if you're scalping around and you're good at it, different story. We can take different types of scalp trades, which we actually really have some really good scalp traders in the group that personally I would love to learn something from. But if we're looking at this bigger picture play, bigger picture area, this is how you keep yourself out of market disaster. I will only trade inside of these ranges. You just reduce your risk astronomically. Why? Because you've made a plan in a high probability situation that could possibly generate a good trade. And if it generates a good trade and it starts working out, you have a plan on when to exit, how to hold it, what to do with the position. If you're getting short here, you have targets down here, which turns out to be like a 25-point trade. It's fantastic. If you're long here, maybe you have targets here, you have targets here, etc., etc. You have this all planned out. So this is how you narrow down your trading range, keep yourself out of trouble, and learn how to identify where and when to execute a trade instead of willy-nilly clicking buttons and face rolling the keyboard on a 1-minute chart, watching every tick that goes by with your heart jumping out of your chest. Okay? I hope you guys learned something from this video. As always, like, comment, subscribe. I will get back to every single comment down below, and I look forward to chatting to you guys soon. Have a great night.